From Washington, this is the HPS Macrocast with Hamilton Place Strategies and Markets Policy Partners.
Good morning. It's Friday, October 25th, 2019. I'm Tony Fratto with Hamilton Place Strategies, and this is the HPS Macrocast. John Fagan and Brendan Walsh from Markets Policy Partners are in the Washington, D.C. studios at HPS. I'm coming to you from the campus of the University of Pittsburgh this week. It's in the beautiful Oakland neighborhood of Pittsburgh, specifically my old stomping grounds at the Graduate School of Public and International Affairs, where I get to be on the Board of Visitors here. And just really excited to be back here and be on the campus all day. I'll be meeting with the team at the econ department, where they have a new degree in quant economics, which is really terrific. So I get to be in Pittsburgh. John and Brendan are in the studio, and with them in the studio today, a special guest, Catherine Lucey from Wall Street Journal, White House correspondent for the Wall Street Journal, formerly of the Associated Press. Really excited to have you here with us today. We, I think what ends up dominating our discussion on the Macrocast is that we have our prepared notes of things that we think we're going to talk about, and then we get up in the morning and there's some tweet from the White House bashing Jay Powell, or throwing tariffs on the Chinese, or saying we're not going to do some piece of legislation that everyone thought was going to happen. So did you think, when you were setting off in your career, and you're going to rise to the esteemed level of White House correspondent, that your life was going to be checking your Twitter every morning to see what tweet was going to make news for you that day?
Well, hi, guys. It's great to be here.
Welcome.
No, because I'm old enough to remember a time before tweets. So,
it was a lovely time.
Which was a restful time.
In history.
I've been in D.C. literally the exact same amount of time as President Trump. I came in to town to cover him when he showed up. Before that, I worked in Iowa covering politics, and before that in Philadelphia. And I've covered lots of different kinds of politicians and some wild times, but nothing quite like this.
Yeah, you were covering. You were in Philadelphia, so you've covered some things.
I've covered some things.
Yeah, I think I know the state pretty well, and I know Philadelphia pretty well. So I think I have a good sense of the kinds of things that you were spending time on.
Yeah,
probably a little different than Iowa.
Yeah, and Iowa's a different kind of political landscape, but then I covered the caucuses, and then I went on the road and covered Democrats in 2016. So I covered Bernie and I covered Clinton. And those were fascinating campaigns. Twitter was not functioning. And it's hard to compare. I think the thing that we keep coming back to when we talk about President Trump and we think about President Trump is it really is norm busting. There isn't really another example of this in American history. And so you have to, in some ways, coming to this fresh, not having covered a lot of other administrations, it means you are able to just sort of reset as this is how we're doing things.
Yeah. It's weird. It's on the having been on the other side of the desk.
Sure.
From you, there was a sort of a norm, and I would spend a lot of time with reporters in your job covering the White House, who are working on developing sources and trying to get access to the president. You probably, ironically, right? There's where we are with this administration, it is norm busting. Access. You probably you get to ask them questions quite a bit, don't you? You're
Absolutely.
Mostly standing out on the Northwest.
Yeah, that is an important thing to remember. For all that they have stopped doing traditional press briefings, and there isn't access in other kinds of ways. The amount of time that he spends talking to reporters is unprecedented. In the Oval Office, on the South Lawn, out on the road, anytime he does an event, and increasingly, all of these things turn into 45-minute press conferences. So he definitely provides a lot of time to reporters, but it's always in those sort of settings. It's not typically a formalized briefing.
What are things? With all of this going on, this was a every time we get get to the end of the week and say, well, that was a crazy week. And it's like, no, it's just the most recent
It's just
week.
Friday.
Yeah, Friday. It's just, they're all kind of crazy. This one saw, more progress in the impeachment proceedings. Actually, I think there was news on impeachment on his personal, some legal issues up in New York. There were some policy decisions that happened. There's just a lot swirling around. What are all the things swirling around the White House right now?
Well, you named a lot of them. I mean, it is, even for this White House, sort of like peak drama at the moment. So impeachment shadows everything. Obviously, that is like the leading storyline of the moment. They're trying to figure out how to respond to that. They are trying to figure out how to work with the Hill. They are, watching, sometimes coordinating, and sometimes just the president is also clearly, watching a lot of this on television and reacting to it in real time. So what you often see is the president functioning as sort of a one-man war room himself in real time with impeachment. But you also have all these other things stacked up right next to it. So in the past week or two, we've had all the negotiations and issues with Syria. We had the president, seeking to host the G7 at his resort, which he then backtracked on. And we still have, and I'm sure of great interest to this podcast, is the China trade efforts, which are still, still seem to be moving along. But so you have this impeachment process that isn't all-consuming in a lot of ways, and yet you still have to continue with the business of governing.
There was a sense really early on when Nancy Pelosi shifted her stance on impeachment, where markets began to get there was a decision point where the markets were trying to figure out whether this would force President Trump to take more chances on the U.S.-China trade side. It coincided with his rather aggressive speech at the UN General Assembly. There was a sense that perhaps he would try to he would try to take the focus away from impeachment and take more chances on some of these other policy fronts. But that's not how it's played out since then. And markets have relaxed to some extent and let the impeachment drama, although the noise is very high, the markets have focused on how in particular how it's playing through on that. And the sense is that they're probably the incentive is to now push that to the back burner. Is that the sense that you're getting as well?
I mean, I think the thing to think about when you think about how he's responding is it is typically very day-to-day, that there isn't often a long-term strategy here, that it is about reacting in the moment. And I think they're thinking about a couple things, and I think in terms of sort of can they win the narrative that day? Can they push back effectively in this moment? But they are also staring down the re-election, which is coming up very soon. And so I think when you think about how is he going to negotiate with Pelosi, or how is he going to work on some of these issues? They would also like to head into a re-election year having gotten some things done. I mean, that before we hit impeachment, that was the goal. So, and I think you also have to take into account that he has a lot of staffers who've been working on these things, some of these things, for a long time. And so that work hasn't necessarily stopped or entirely stalled.
Yeah. And how John said that the impeachment's not moving the needle with the markets. What about with voters?
It's interesting. So I was out of D.C. last week. I went to Texas, where the president had a rally, and I spent some time talking to his supporters, but also like traveling around the state and just trying to talk to people who weren't necessarily, dug in on either side. What we've seen a lot of throughout this presidency is that his support among Republicans has been very robust, and that really hasn't shifted so far with impeachment.
Not a bit.
No. Yeah. So that is the same. And when you talk to Republicans, and certainly when you talk to his supporters, they talk a lot. They offer a lot of suspicion of the process. They're concerned about it being behind closed doors. Mm-hmm. They question whether these charges are legitimate. And so that is that space. And then on the Democratic side, if you have people who already dislike him, this is just another example to them of why they think he needs to go. The space to watch, and where some polling is suggesting that numbers are ticking up, is independents.
Yeah.
And I think what we saw in 2018 in the midterms was a real sort of pushback in some of those like suburban congressional districts of more moderate, more independent voters women, people coming out are really against the president. And so what happens in that space, I think, is the thing to watch. If more of those people start supporting impeachment and sort of what that means heading into next year.
What about the Democratic voters? Are they getting frustrated? Yeah, as you said, it's all behind closed doors, and we don't really know what's going to happen.
Yeah, I think Democrats really want to see something happen, but Democrats have also wanted to see this happen for a long time. So I think the one thing for Democrats and what you hear from those campaigns and those voters is there's a huge amount of Democratic enthusiasm. We saw that in 2018. We're seeing that with the candidates on the trail, and this only kind of accelerates that.
Yeah, that's a great point.
Well, of the things out there, you mentioned You mentioned China. The China negotiations, which I guess we'll learn. Whether that is whether they've got something sealed that they can present in a phase one negotiation when the president meets with Premier Xi in Chile in November. Some of the other things out there are USMCA, the replacement for NAFTA. Are you seeing? Are they out briefing on this? Or I know they're not doing. I know we're not seeing daily briefings, but are they coming out and talking about where they think that's going?
So on China, as we said, we know they're working on that. There is, definitely an effort to try and get this phase one deal. Although I will say there's an interesting story in the Journal today about some concerns about even if you get a phase one deal, how do you get the phase two deal? Like the actual big deal still remains like really hard to do, which is part of the reason they haven't gotten one. On USMCA, the Mexico-Canada trade deal, that is something that work has continued on, that the White House and the Hill have continued to meet on. And that was something, I think, as I said, was pretty far down the pipeline before impeachment started. Yeah. And so there is on both sides some, I hate to say optimism or make too many predictions in this political landscape, but certainly I've talked to people who think that there is still a pathway for that. I think that's where we've been. That's where we've been on it. I mean, whether it's for, whether it's because of whether the politics are helping this or not. There was when impeachment started, there was a view that nothing's going to get done in Congress, but I think people started to realize that there's actually aligned incentives on both sides.
First, as you noted, there are people on both sides. One of the rare cases where people on both sides of the aisle actually want to see something get done on USMCA. But in particular, if you're Nancy Pelosi and you're trying to show that we are not a partisan body, we are able to get things done, and even a presidential priority like USMCA, we can go get that done if we think it's the right thing to do, and with the some additional work on it. And then
also,
we can
if you're Nancy Pelosi and you have a bunch of freshman members representing districts that were won by Trump in 2016, right, it could behoove you to give them something that they can go home with to show that they can. Because one thing you will hear from voters in some of those areas is they didn't just send their representatives to Washington to just work on impeachment. Yeah.
The politics. Politics is coming up, pretty fast. I mean,
you're I think it's here.
We're
here, guys.
We're obviously in the thick of it with the Democratic debates and the winnowing of that field. I think we had, I think Tim Ryan dropped out yesterday. Yes. It was I think a surprise to people that Tim was was running actually.
I think most people had forgotten he was still there. So
I did. I literally did forget that he was still there. So
once you're off the debate stage,
the timeline. Catherine reminded us yesterday. It came as a bit of a shock to us when she underlined the fact that it's only 100 days. It's 100 days until the Iowa caucuses.
Iowa's coming up, guys.
Wow,
it's happening. The candidates are they've all kind of moved to Iowa, so that's so
that's going to go fast. Do you have are you still paying attention to Iowa? I mean, given your previous work there,
I covered the president, and that's my main focus, but I'm certainly following it, and I check in with some people there, and I try and keep an eye on the race there, obviously, because I think the result there sets the tone. Whatever we want to say about, there's a number of states you can win, there's a number of pathways. I think whoever wins Iowa obviously starts with a lot of momentum.
Are you getting a sense from covering the White House of what kinds of things, the sort of priority issues he plans to run on, and what he might point to to make a case for a second term?
Well, the thing that they will talk about a lot is that he has kept a lot of promises. So if you're at his rallies and you're at his events, they'll have signs that say promises made, promises kept. And some of the things they will point to are, he exiting the Paris Climate Accord, the Iran nuclear deal, the tax cuts that they got through in the beginning of the administration. They also point to the fact that he's negotiated the USMCA, even though that's not concluded. So those are things they talk about, and then he likes to talk a lot about the economy, obviously. And I think one thing to watch that we're all obviously watching, again, probably this room more than others, but is the strong economy remains the key selling point to perhaps your more moderate or more centrist or Republicans who maybe weren't with them from the get-go. Mm-hmm. And so that is a concern if something turns there, and so they are trying to push that. That said, he also talks about lots of other things. I think we all saw in 2018 a lot of Republicans running out in the states wanted to talk about the economy, and the president ultimately talked a lot about immigration and other issues. And so he will also continue to hit some of those issues as well, as we have seen him do throughout.
Yeah.
Is there anything he's teeing up, any new promises he's teeing up for the second term, anything explicit or? We
haven't heard a lot of, it really is more of the same, send me back, I keep working on these issues. I haven't heard a lot of new, they certainly haven't rolled out like a new policy agenda, like a second term, sort of ambitious idea that I've heard. It is more that here are the things we've ticked off, here are the things we're going to keep working on, and a lot of focus on look at the economy and what could we do more. I think at points in time there have been discussions about would there be more tax cuts, but I haven't heard him flesh that out.
Well, more tax cuts is definitely something that has the prospect of those are always exciting to Wall Street, and that contrast between the political noise and the market equanimity, the very low volatility amidst this environment isn't. I think our discussion really pointed to it. In some ways, this impeachment drama has clarified or even improved the policy atmosphere on some of these, on U.S.-China trade, potentially on USMCA. It's maybe focused the administration more on getting things done and sort of ticking the boxes on some of these. And there's a sense on Wall Street that political gridlock is not it's relatively good for markets in that you don't have to worry about policies that might be working against your stocks, and you can just put that aside.
And it seems like Wall Street also, I think, like all of us, has sort of acclimated to the tweets. I don't know if that's accurate, or it seems like everyone has kind of recognize the space that we're living in.
But Wall Street is worried about the trade war. And as you said, that Trump goes 100%. On he touts the strength of the U.S. economy, but the U.S. economy actually is slowing, and it is kind of being hurt, especially the manufacturing sector. Do you get a sense that behind closed doors, they're equally worried?
He would like to get a deal, but he has always been very clear that there's things he wants in a deal. One thing we have seen is they have tried to take care of and acknowledge farmers and sort of how the trade war has impacted them. Yep. They have made efforts there. I think both because they know that this has an impact, and also that's a key part of his support. So, and you've seen him go out to the States. Although I will also say that when you talk to farmers and people in agriculture in a lot of those states who supported him, we haven't seen a lot of them saying that they won't support him next time. A lot of them do say he needs to take a tough line with China, that they're prepared to go through some pain to get there. They understand what he's doing.
That's
We've definitely heard that.
Because you do.
Some of them are saying they can only go so long.
Right.
But I'm not. But there is some understanding of it.
Yeah, but that's helpful because you do see on the nightly news or articles, they'll find somebody that says, I'm not voting for Trump, I'm a farmer, but you're on the ground. You kind of have to more cherry pick those people.
I mean, I don't want to say that, and I can't speak like those reporting. I'm just saying that I've definitely talked to people who say they understand what he's trying to do in farm communities. And when I've talked to sort of leading Republicans in Iowa, they say that they have not seen a huge shift away from the president.
And certainly from the Democrat camp, you certainly don't hear a lot of, President Trump, we need to get easier on China. There's sort of a sense of quiet, except, they're almost happy that he sort of kicked the door down. There's quibbles about the methodology, but not necessarily the policy direction. Do you think that's
Maybe you
fair?
could send a few debate night questions over to the...
We'd be happy to, yeah. All right, so we'll just looking ahead at that, Catherine. The debates coming up. We have the November and December debates. November debate is in 2 weeks, I think, or 3 weeks.
Right. Yeah. I thought they would have winnowed more by now, and they haven't. So we're still dealing with a lot of candidates.
Pretty big.
Yeah, the amount of money they're able to raise is quite fascinating.
It's amazing. But I think that's to our earlier conversation. It speaks to there is a lot of enthusiasm. So, and I don't think that's going to change.
Well, it's clear. I would tell you, we joke about those. We joke about the tweets. I mean, and how the market reacts to them. The market participants are they've discounted to a large degree. I think the attacks on Jay Powell, because Powell's generally going in the direction that the president seems to want the Fed to go anyway. And so they are listening more to the Fed chairman himself. China, the China trade issues. I mean, if it's not obvious, we could tell you it is super sensitive for markets. They are of all the things that they do react to, even though there's a lot that they discount. But the likelihood that a deal will or will not get done. The likelihood that tariffs will or will not be imposed is probably the single most, maybe after the Fed, the most sensitive factor out there impacting markets. So they are watching the tweets and trying to read it, and we get I know John and Brendan, we all get calls saying what did he really mean that? Is it really going to happen? And I can imagine for a news gatherer and reporter trying to discern between the tweet that is just spouting off or the tweet that is the news tweet that really, this one really does mean something, must be a little bit of a challenge.
Well, there is also a difference between complaining about something on Twitter, sort of venting, saying you're frustrated with a staffer or an agency head, and saying, I am doing X, Y, and Z on tariffs. And he is the president of the United States, and if he says he is doing X, Y, and Z on tariffs, we take that seriously. I mean, I think as we all do. And so some of it is understanding how to read that. And even when he is venting or complaining, that is still newsworthy. And some of what we do is try and put into context, what does it mean? Is he taking a policy stance? Is this sort of indicative of some kind of action or not? And we've seen that unfold differently in different cases.
Just a couple of the other security blankets that the markets wrap around themselves when they think about the U.S. political situation. One is that the overwhelming assumption is that his support in the Senate is plenty solid, that removal from office is a distant and minuscule tail risk, even in the case of an impeachment in the House, and that and then the next fallback position is, even if he were to be removed, President Pence represents policy equivalence. So it's very hard with those kind of two fallback positions to get market participants to really focus on this. Do you think that there's something that they're missing in this formulation?
I mean, I don't want to redirect the markets today, guys. I think to your first point, we have seen a very strong Republican support for the president throughout, and to the second, we certainly have not seen the vice president sort of step away from this administration's policies. So I think your assessment is accurate. Again, I kind of come back to it's hard to make a lot of predictions with this president. And the other thing I always say when I do stuff like this is, I'm really reluctant to ever declare anything a sort of a turning point or an aha moment, because we just don't know. Yeah. And we've had all these moments where you're like, well, this is it. This signifies something. This is going to change. His support's going to move. The public's going to think X, and then it hasn't. That doesn't mean it won't.
2 days later, we literally totally forget about it.
Yeah, I mean, I could list like 20. I mean, no one is talking today about something that happened 2 years ago. So it's very hard to game it out.
All right, I think we're late for a break. Catherine, it's just amazing having you here this morning. It was so much fun.
Thank you.
Yeah. And you get to go back to more fun.
I've got some tweets to go read, guys.
You do have tweets. Hopefully you didn't miss. Hopefully you didn't miss some important tweets.
Noticed
no,
one yet.
I get all the alerts.
I've been keeping an eye on for you. Thank you so much for being with us this morning, and I would love to have you back, especially as the campaign progresses and some of these things. We'd love to have you join us.
Thanks so much. I'd love to come back.
Thanks, Catherine. You're listening to the HPS Macrocast. We'll be right back.
HBS is excited to introduce our listeners to Heartland Forward, a brand new think and do tank focused on advancing economic performance in the center of the country. This new research institute is the only one of its kind, located in and dedicated to the 20 states in the Heartland region. Led by Ross Duvall, former chief research officer at the Milken Institute, Heartland Forward will publish original new research and advocate for fact-based solutions to foster job creation, knowledge-based and inclusive growth, and improved health outcomes in Heartland states. You can learn more about Heartland Forward by visiting heartlandforward.org or following them on Twitter at HeartlandFWD.
All right, we're back on the Macrocast. John and Brendan are here. It was great having Catherine in, and I look forward to having her back. It was great to get some perspective from on the ground at the White House. But what else was happening? We had earnings. We had Brexit news. What were you focused on, John?
Well, earnings season is in full swing now. Last week was the kickoff, and it featured almost uniform upside surprises by the major companies that were issuing results, particularly the big banks. It was a very upbeat start to an earnings season that wasn't supposed to be all that great. And that actually is a pretty common kind of motif with earnings season. When expectations and guidance get downgraded significantly, it gives companies a little bit of a lower hurdle to jump over, and the upside surprise ratio is quite high. And that's what we've seen. And we've seen it continue this week to some extent up until this morning, as of this morning with the quantum of upside beats. Companies that were topping consensus earning forecasts was over 80% of the reporting companies. Now we haven't had even half the S&P 500 report yet, but still that is a really high number. Yeah. And sales, beating on sales, which tends to be a little bit lower, it's harder to game that number. That was 65%. They're beating the consensus at a 65% clip. That is pretty brisk, and it has been really buoyant for equities. And that's continued this week despite some high-profile disappointments. Obviously, we saw Amazon in a very rare earnings miss last night. The stock isn't down that much, though. When I last looked, down about 5%.
It's a different. If you look at that, obviously the Amazon was a big miss. Caterpillar was a big miss, but they're two different stories, right?
Yeah, totally. Caterpillar undershot, but expectations were so depressed that the stock rallied through the end of the day. When stocks rally on bad news, that's a real tell that you've got that a lot of bad news is already in the price. And so we've just seen equities grinding higher this week, despite some of the household names like Ford, 3M, and Twitter giving us downside surprises. But next week is a big week for earnings. We've got Facebook, Apple, and Google coming in, and those are certainly going to set the tone.
We also saw Brexit news this week. Boris Johnson,
as always.
Just always like what? It's one step forward, two steps back.
So
or one step back, two steps forward, whatever your point of view is, whether you're a Remainer
or supposed to be going somewhere, aren't they? They just
so tantalizingly close. And in the UK, they have a phrase, the nearly man, someone who's always just a dollar. A day late, dollar short. I don't know if Bojo, Prime Minister Johnson, qualifies for that moniker yet, but he got the acceptance of his deal in Parliament was a watershed moment, but it was followed swiftly thereafter by Parliament rejecting his accelerated time frame, which threw the entire process back into uncertainty. The current deadline remains at October 31st, although Prime Minister Johnson went against his previous statements and did request an extension. The European Union has signaled that they will grant that extension, but they are withholding that for now because this week Prime Minister Johnson, in an effort to break the stalemate, is moving to basically bringing a motion on Monday that could trigger a general election if it gets sufficient support in Parliament. And so Europe is hanging back for that. So another week, another cliffhanger Brexit vote, but the basic message is the delay has already been requested. The risk of a disorderly, accidental, no-deal Brexit is now very much diminished, and that's put a floor underneath the pound, and it's just below 5-month highs versus the dollar.
Not bad. And we'll always have more Brexit news. I think we're going to have it for a while. But by the way, I don't think people realize this is going on forever. There is no end point. They say there's some end point. I was talking to someone this week. Said, "Oh yeah, it's too bad because it was going to end on October." So it doesn't end. It wouldn't end in October 31st. It actually begins on October 31st, or would have. But it's literally we'll be talking Brexit forever.
Yeah, I saw somebody say the other day. So it'll be 2072, and a representative from the UK comes to Brussels and asks for extension, and no one can remember exactly what they're extending it on, but it's a nice little annual ritual.
So next week we have. So you mentioned some of the big earnings. We're going to be looking at next week. We have some data. We have the Fed.
Yeah, very big macro week. So in China, we get official and unofficial, a private measurement of the manufacturing sector in China, purchasing managers index, which is very important, especially with the China-U.S. trade negotiations. So if we see more pain, obviously it raises the odds that we get this first deal. And then we also get the first estimate, both in the U.S. and the Eurozone, on third quarter GDP. So it looks like the U.S. it's not slowing, falling off a cliff, but we're going back to that 2% kind of rate that we were for basically the last 10 years. The
reversion to the mean.
Right. We got a little stimulus from the tax cut, but that's basically over. And then we also get it comes in the personal spending and income, which is important. We want to see how much people are making and spending. But the most important data point within that report is the PCE price index, and that's what the Fed uses to target inflation. So they focus on the core, which takes out the measurements of which are a little more volatile in terms of food and energy, and they have a 2% target, and right now we're at 1.8%, and that's kind of important because the day before we get that, the Fed will have their October meeting.
That's Tuesday, or I'm sorry, which that the PCE comes out on.
So that'll be on Thursday, but the Fed
Thursday, yeah.
But likely the Fed will probably be able to see that. Yeah. And we saw the president bullying Chairman Powell to cut, but the market maybe is even the bigger bully, and it's currently pricing in about 93% odds that they will cut. So I think we all think they will, but also even more interesting, the market's pricing about 25% chance that they do another one in December. So I'm sure that the Fed would prefer not to do that, but we'll see if both the president and the market kind of force them to.
Yeah, like drinking beers at the bar. But between three in a row and 4 in a row is a pretty big jump. So they may try to put the brakes on here and signal that they're going to be on hold in December until they see basically three consecutive cuts that they will probably have done by next week is a mid-cycle adjustment. But once you start getting into 4. Then you're talking about a full-blown cycle.
Yeah. And actually, interesting, BlackRock, which is the largest asset manager in the world, about a year ago, they called for the Fed to pause on hikes. And today they also came out and called on the Fed to pause on cuts.
And they cite the fact that the Fed is really pivoting toward this liquidity issue.
Exactly.
And clearly we talked about the funding markets and the Fed's additional special provision of liquidity, and they already sort of stole their own thunder here by announcing the fact that they would be re-increasing the balance sheet to liquefy, add liquidity persistently to funding markets at a clip of $60 billion per month.
Right, and it's through the first half of 2020,
right.
So that's a lot of money.
Yeah, but it's not QE, it's not quantitative easing.
Right. And that's why they did it.
I can't believe it's not butter version
because basically
of quantitative
it's the exact same thing, but they didn't want to muddle the message if they're going to cut in December.
Well, but
actually, the biggest one we're going to have.
We're going to have all of that to talk about. Yeah. We're going to have all of that and the jobs report.
Right. That's actually the most important data point of the week.
Yeah. All right. Well, we'll dive in. I think it's going to be all jobs, all Fed.
Exactly.
Unless tweets disturb it. But I'm anticipating all jobs, all Fed when we're back with you on the Macrocast next Friday. For John Fagan, Brendan Walsh, and for our special guest this week, the Wall Street Journal's Catherine Lucey. Have a terrific week. Have a terrific weekend. We will see you on the Macrocast next Friday. Thanks.
Thank you for listening to the HPS Macrocast. Please remember to subscribe, rate, and share. Find more from Hamilton Place Strategies at hamiltonplacestrategies.com and follow Tony Fratto on Twitter @TonyFratto. Learn more about John Fagan, Brendan Walsh, and the work they do at Markets Policy Partners by visiting marketspolicy.com.